Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Hey, it is Sarah Larbi. Welcome back. You are listening to Where Should I Invest? I hope you are doing well. And today's guest is Koukun Unosawa, who is a real estate investor specializing in the BRRRR strategy, legalizing basement apartments, and has been doing so since investing in his first deal back in 2013. He's built a team of professionals, including architects, contractors, property managers, home inspectors, lawyers, insurance agents, and so forth, and has been really building equity, creating that freedom. And it is great to see another investor doing this in the Ontario market as well. So if you are interested in legalizing, for example, a house to 2-unit, 3-unit, doing conversions, taking a bungalow, creating an additional suite in the basement as an example, this is going to be the episode for you. And don't forget, guys, if you are interested in the BRRRR strategy, buy, renovate, rent, refinance, repeat, my BRRRR Freedom community is starting in January with 2 monthly calls. So don't miss out. We are going to cap the numbers so that it is still a manageable group, but you guys will have access to everything that I do, including my team members. So we're going to have a call a month, which is going to be content, me speaking and educating on everything that I've been able to do for all of those steps. And the second call of each month is going to be bringing a team member, answering Q&As, and being able to create, success for you as well, and give you the tools that you need to be able to successfully do the BRRRR strategy in any market. So whether it's Ontario, whether it's somewhere in Eastern Canada, Western Canada, or not Canada at all, and you are listening to this and you are interested in learning more about it, don't forget to check that out at sarahlarbi.com, and all the details are there. So with that said, guys, I hope you enjoy today's podcast. Hey, Koukun, welcome to the show. How are you?
Doing good. Good to be here.
I'm excited to have you on. So for those that may not know about you or who you are, give us a 30,000-foot view.
Yeah. So, my name's Koukun. I've been investing in real estate now for the past 7 years. I got started back in 2013, and my journey has been a little bit of an interesting one, where the reason I got into real estate was my parents actually. So our family immigrated to Canada in 2008. And my parents were a little bit older. They didn't really have anything saved for retirement. They were kind of, working, basic entry-level jobs. And I was talking to them, hey, you guys are getting older. You need to figure out something to be able to retire. And they didn't know the answer. I didn't know the answer. But we're like, this is a problem we need to solve, right? And then through researching, Googling, just trying to find a solution, I came across, real estate investing and just some websites regarding that. And then I told him, hey, here's the solution. Let's do it together. So we ended up partnering up. So it actually became a whole family endeavor. So me and my brother were the working partners. My parents and my sister were the JV partners, putting the down payment, putting the credit. We got started in buying, like a single family home up in Barrie, semi-detached in Cambridge. And then it just snowballed from there. And then, here we are 7 years later. And it's been a heck of a journey.
Very cool. So like you, I started in 2013 and I started with Googling, but it is really cool that you've got the family, involved, and everybody, hopefully you guys all get along and you still get along, but everyone had the same goals, which was to help them retire. Now, I'm sure there was a little bit in it for you guys as well to create some wealth for the kids too, right?
Yeah, absolutely. So we, in all honesty, we set it up as a traditional joint venture structure. Which, looking back at it, we didn't have any experience or knowledge, but we wanted to help them figure it out. And cool. They also needed us to take the lead on it. They're not really the type of people entrepreneurial in the sense that they would go out and learn about investing, find tenants, and just, figure out all the steps. So they kind of needed us. So it worked out really well in that sense. And now actually the first 2 properties we bought together, we were able to refinance and put another down payment on a 4-plex. So I'm actually in one of the units in that 4-plex in St. Catharines here. which is also going to be a property that's going to help them to retire. So it's come a long way since then.
Very cool. So now, are all of your deals with the family, or do you have any on your own as well?
I do have, so one I've recently purchased on my own. I have this one property, the fourplex, still with my family. The original two we have since sold. They were single family homes. They didn't quite cash flow. So after we refinanced it, we kept it for a little bit, but then we decided, you know what, the markets had really lifted in Barrie and Cambridge. So we thought, it makes sense to sell those. And I have a couple of properties with my brother, and also a couple of properties with another joint venture partner as well. So a little bit of a mix, but funny way, I got my start the opposite compared to most investors, where I joint ventured first, and I eventually got to the point where I could buy a property on my own. Usually people start the other way around, right? They get their own properties and then they do joint ventures. But I don't know, so recently a big part of what I've been spending my time on is like personal development and really focusing on what actually matters to me on a personal level. Mm-hmm. And then looking at investing, looking at business. Okay, how do I get my business? How do I get my investments to serve that purpose, right? And the idea at this stage, so in total, I have 6 properties with all my partners. The idea of taking that to 60 is not one that actually makes me excited. I know each property, it definitely moves the needle in terms of like financial independence, building wealth, but there's a certain level of work that comes with each property. You have to like care about it, right? You have to, even if you don't manage it yourself, you still need to watch that the manager's doing what they need to do. So because of that, I've decided to shift to almost like growing slower and, get each down payment myself, buy each property myself, and I will accomplish less, but it will be at the speed that I find comfortable. And in the meantime, so I work as a realtor as well. I've been doing this for the last 3 years. I'm continually building that business. That's what takes 90% of my time. So I want the investments to work for me on the side, but my goal is not necessarily to take any income from it in the short term. I wanted to reinvest it and grow it. So that maybe 10 years later, right, I've built up something considerable on the investing side. And that's kind of where my headspace is at.
Yeah. So, I mean, I think you said a lot of really interesting things, and I'm listening to what you're saying, and a lot of investors will say, I want 100 properties, I want 50 properties, I want 1,000 properties, but that comes with its ups and downs, and it goes back to what is your goal, right? So for me, like, I don't need 100 properties, right? I think it was important for me to have my own set of properties, and then now moving forward to JV, but on a smaller scale, because it still matches with my lifestyle that I'm looking at, right? So the more deals that you do, the more JVs that you have, in a way, like the more problems you have. Yes, you can, scale faster, but it doesn't necessarily mean that you're going to do better. And one of the things I was talking to my mortgage broker about is she's looking, because she sees a lot of portfolios, but then she sees some people with, dozens and dozens and dozens of properties, but it doesn't mean that they cash flow that well either. It doesn't mean that they're in as good of a situation as somebody that might only have half of that, as an example. So it's really property dependent. And I do want to go back to what you talked about with JVs and not JVs, and, just to get your take on it. So, for me, I'm going into the JV world moving forward. It was important for me to build my own portfolio, but I'm curious to see, what your thoughts are on joint venturing, and then what the pros and cons are in your opinion.
So I feel joint venturing definitely has a place in it. And the reason I say that is it's not for everyone, for sure, both as the active partner or the passive partner. Some passive joint venture partners actually should be active because they're super interested, they're super eager, they want to learn, right? And there are some great passive partners where they're like, they do something else, they make their money, they want time with their family, but they want to own real estate, but they want nothing to do with that real estate. They just want to own a piece of it, right? But just in the line of my work where I work with investors. I sort of walk them through, okay, this is the type of property we want to look at. This is what the rents are, right? Trying to help them assess it. In the conversations that I have with my clients, there is definitely a distinction between the few that really take it far, right? Where, they're 100% into it. So for example, a lot of work I do is in Welland, and Welland is not close to the GTA, right? So I'll have clients in, Milton, Mississauga, Toronto, driving out to Welland like twice a week. They're in like knees deep, making sure the contractors are doing their thing, renting out the properties, and really involved, right? Wanting to take action, versus some of my other clients where they say they're interested, but I can really see it's hard for them to even pull the trigger. There's a lot of fear that comes in investing, especially if it's their first time, right? And I'm sure you know this as well, coaching your clients, it's especially getting started is probably the biggest first step. So it's for a lot of those people, I can really see, hey, if you just partnered up with someone, even if it's for your first property, it would take a lot of the fear out of the equation. And then the next one, if you want to do it on your own, you can, right? Because you've now taken that step. Your brain has more data to know that, hey, this investing idea is actually sound, right? Because when fear comes into the equation, it's like almost all reason gets thrown out the window, because there's this fear that, hey, what if I just lose everything, right? What if the market crashes? What if this property we buy is not what we expect, right? And yeah, in a funny way, when I got started as an investor, I was so naive that I wasn't scared, because so my family literally never owned a property in our lives. So they had no data of what owning a property was. I was, to be honest, I was 17 when I was looking for my first property, and 18 when we bought it, right? So an 18-year-old has no, specifically to me, maybe there are smart 18-year-olds out there, but I didn't know, I had no context, right, of what taking a mortgage out was. And I had to learn all these terms almost in the process of buying it, that I didn't even know it fully by the time we bought the first property. And the funny part is, most of the fears that most beginner investors have, most of those things happened to us. Like, we had a vacancy of like 6 months long, right? Crazy experience. When we bought the first properties, we had both our tenants leave at the same time. And then we found 2 new tenants. And in the first 2 years, that happened twice. So we were living in Toronto at this time, my family, and we'd be driving up to Barrie to show it one day, to Cambridge to show it the next day, twice per week, twice on each property. It was
But how much do you learn so much by going in and making those mistakes? I will say, the opposite could hurt you too, where you overanalyze everything. Yes. And you know so much that you just sit there waiting for that perfect deal. That a perfect deal probably won't come for a very, very long time, right?
Absolutely.
And so I think there's a good balance between the two, between just jumping in and not knowing anything versus, and the opposite of just not doing anything because you're so scared because you know too much. And I'll tell you that the most that you will learn is by doing it and making some of those mistakes.
100%.
Hopefully they're not expensive mistakes, and you can learn from others expensive mistakes so that they don't need to be yours.
Yeah, absolutely.
But it's good to see, because you would not be where you are today if you didn't jump in at that point in time, likely, right? And that I say real estate is very forgiving in a way. Hang on to it for long enough, and even a $20,000 mistake at some point just erases itself in a way.
Yeah. And I think I had the blessing of working with a realtor that understood investment. She was an investor herself. She had been doing that for a good few years. She managed her own properties. She had that experience of finding tenants, going through the process. So even though we were naive, I didn't know what I was getting into, but she had my back. She was looking out for the things that I didn't even know what to ask. Mm-hmm. She was already looking out for me, right?
That's good.
So I think in this journey, you're absolutely right. Taking action is going to make you learn way more than not. But then at the same time, surround yourself with the people who do have the experience and have your back, right? So that they're going to guide you in that right way to avoid those mistakes that'll take you out of the game. That's the worst, right? If you have a mistake that takes you out of the game, quit real estate, sell all your properties, you can't get back from that. But if it's mistakes like the vacancy. For example, you're absolutely right. We spent, I think, $26,000 or something along that line in terms of carrying cost. So me and my brother, so something I'll probably never do ever again, but we realized that it was our inexperience that led to such a long vacancy. So me and my brother told my family that, listen, we'll cover the carrying cost because it's kind of on us. That was our role. And because we didn't know what to do, we'll cough it up. We never got that money back until we sold the properties, right? So that was like our tuition to learn and really learn. And that pain sometimes is really what you need to take that step forward, right? So
absolutely. And just to go back, like, we would not be here if it wasn't for a good, solid team of people. And it's hard in the beginning if you don't know anybody in the industry to figure out how to start. But I think, like, the easiest way I could tell you, unless you're hiring a coach, you're going to networking events or whatnot, the easiest way to start, in my opinion anyways, is once you pick your market, pick your realtor that's an investor also themselves doing the strategy. That's also very important, the strategy that you want, and utilize their team. And at some point you can change the players on the team, but at least you're setting yourself up with decent team members or good team members or great team members. It's good for your realtor as an investor to have them on board. Likely they're good people too.
Yeah. I mean, in a funny way, that's why I became a realtor, because I could see that the realtor I was working with gave me so much value, right? Because I was a new investor, I didn't know anything. She was teaching me all the steps along the way. And at that time I was kind of thinking, okay, what career can I do? I'm super interested in investing. I can't really see any other career path. Why don't I just go deep into this and actually teach others what I've learned to that point? And I didn't really know that much, but it was still enough that I could start helping others to get into the game. So you're absolutely right that building a team, finding a realtor, right, and utilizing their network is a big part. This may kind of go back though, in terms of what you mentioned about coaching, right? Having a coach. I notice within my own clients and even in my own business. So I've hired real estate coaches, and even specifically as an agent, I've hired a coach who trains real estate agents for the last 2 years. The money spent in coaching, it's ridiculous the rate of return you get, because when someone ahead of you in the game can point you in the right direction and help you see the things that you don't even see, it moves the needle way more than pretty much anything you can do. So this is the funny thing though. A new investor considering paying a large amount of money in coaching, it's a scary thought, but it's hard to convince someone otherwise. But if they did that with the long term in mind, that they're going to do this for the next 10 years, get set up on the right foundation to begin with, and then have that accountability of having a coach to give them that little push when the fear starts setting in to get started, they will actually, like, looking back even at myself, right? I had a realtor that understood investment, so that was a big part of it. But had I invested in a coach right from the get-go, I would have probably done more. But anyways, I'm still grateful for the journey that I've had. But I can really see even within my clients, like one client in particular, he's now on his 7th duplex conversion. And the reason we met was we had a common real estate coach. And at that time, he was still sort of getting the foundation, getting the pieces in place, figuring out the strategy. But then once he took off, he just really took off, and investing that money up front and that time to learn and really think about it, like, he's done now far more than most of my clients because of he put that money up front. He put that effort up front, energy to learn. So yeah, I think, it's hard to almost convey this to someone who hasn't experienced it, right? Because like, even for myself, when I got started, like, the idea of paying like $10,000 to a coach, that's what I paid to my current coach each year. And I'm like, that's the best money I'm spending in my business. All the money on advertising, marketing, or like all these other expenses, are the rate of return on coaching is like, it's ridiculous, right? So anyways.
Yeah, absolutely. I mean, I agree too. Like you, when I first started, I didn't know anyone and I made a lot of mistakes. And now I hired, so like, depending, and everyone's going to have different, coaches that will work for them, right? So like if, for example, you want to do a certain strategy, find a coach that's doing that strategy presently as well, right? And so, and likely in the markets that you want to be invested in. So when you look at like coaching, maybe somebody doing something in the US, if you're not interested in US investing, might not be as good as getting somebody that's doing what you're doing for Canada, because the markets are quite different. So, definitely coaching 100%. Like I've got some coaches of my own as well that I've hired now to help me as well with different things that I want to do. But ultimately it's important to pick them right and to pick the ones that are doing what you want to do or that are where you want to be. Because I'll tell you, there's lots of coaches out there that could be great coaches, but the last property that they bought was 10 years ago. Well, so much happens even in a couple of years. At some point, you've got to make sure that person's current for you.
Mm-hmm. That's true. Absolutely true.
But 100% agree. So what's your strategy? Like, I mean, you talked a little bit about basement conversions, duplexing. You've talked about Welland. Walk us through that a bit, what you do.
Yeah. So if I can share just how I got to that point. So duplex conversions are my bread and butter right now. That's where I'm seeing the most value. But I took this long path to get to that point, right? So first of all, I was doing work in the Hamilton market, right? And then I was just noticing prices were increasing, multiple offers. And I was like, okay, where is the trend going to, right? At that time, it was moving towards St. Catharines. So started looking at St. Catharines. And then I found out that the city of St. Catharines is actually quite difficult. I did a duplex conversion there, and some of the building inspectors can be very challenging. The planning department can be quite challenging. So my project there, another horror story, but it worked out. It took 1 year and 3 months from start to finish of our duplex conversion. Now we had many challenges. Part of it was us, part of it was, our team that we had to do that project, but it was definitely a painful experience for us, our joint venture partners. It was vacant for that entire time. We didn't have one unit to rent out. It was a full renovation, top to bottom, carrying costs for that entire time. The renovation went, I think, 40, 50,000 over budget. Crazy.
You probably made all the mistakes in the book with that one, but lots of them, I'm sure.
Absolutely. And yeah, so learning from that, I went through this phase of, okay, let's cut the duplex conversion. It's way too much renovations. Let's find something better. Right. So I looked for something better, and all I could find is specifically in the Niagara region, there's not a lot of newer multifamily properties. Right. So many of the duplex, triplex, fourplexes were these old 100-year-old properties that some of them were renovated. Right. So some of them, all the mechanicals had been taken out, redone, but your floors are sloped, and it's quite a bit of the older style of property. And many of the clients I was working with, they were like, I don't want to buy a property that was built in the 20s, right? They want a newer property that has like a poured concrete foundation and has like better like bones, so to speak, right? So I was like, okay, where can I get a property that is built not new, but a little bit newer, like 50s through to maybe the 90s, right? Somewhere in that range, but can still cash flow, because I can buy these single families all day long. And in the Niagara region, in a funny way, you can still cash flow on a single family home, but it's tiny, right? If you want if you want to build some margin there, So I was looking and I was like, okay, so the duplex conversion is a strategy. Investors are doing it, but my experience was painful, right? Where can I learn from this, and what can I change to still do it? So what I was looked into at that time was the city of Welland, and finding out, okay, this city has a lot of good things going for it. It's a smaller city, a little bit further away. Prices were a little bit less, which helped, right? And then I started to talk to other investors and learn, okay, how good is the planning department? How good are the building inspectors? Has anyone done a conversion here, and what was their process like?
Yeah.
And then going through that, I started to get the feedback. At that time when I started, I didn't know any one person that had done a conversion in Welland, but every other permitted renovation I could hear of seemed to go smoothly. So people would apply for a permit, things would go smoothly.
I will say versus like St. Catharines, not to interrupt you and I'll let you finish, but Welland is much more like they welcome investors. They want investor money, you know, and you look at St. Catharines and I feel like it's the opposite. But anyway, so those are my 2 cents, but keep talking.
Absolutely. Absolutely. Yeah. So learning that was the first step. And then I had this one client who's done the most conversion so far. We discussed this, okay, is this an idea you want to try out, right? Because he was also in that phase of he wanted to grow, but the existing multifamily was not quite what he wanted, specifically the age and also being rented under market, right? When you have rents that are like 50% of the market rate, you can get them maybe for a good price, but unless you have some way of getting the rents up to the market, it was a tough gig, right? So with a duplex conversion, you can buy essentially a bungalow or a back split, a side split, just any normally single family home with a bit of space. And then you split it into 2 legal separate units. And the nice part about it is you're typically buying it from someone who's from an owner. So they're moving out on the purchase. So it's completely vacant. You get to set the market rents. And the curious thing recently, actually, well, 2018 is not super recent, but with the change in the rent control rules, what I learned is that the basement apartment is considered a new dwelling unit. Correct. and actually doesn't have rent controls, which is sweet. So you buy a couple of these, half your portfolio doesn't have rent controls, right? So
yeah, absolutely. As of 2018, November, I can't remember if it was November 16th or something, I don't know, mid-November of 2018, yes. Anything that's new, a new dwelling.
Which was curious though, because before this, I think it was like 1995 was the start of 91, right? Yeah. Was the new construction from that point didn't have rent controls. Rent controls came back and then it flipped back. But when it flipped back, specifically in the wording I was reading on the government website, in brackets was example basement suite, legal basement suite or basement apartment, right? Mm-hmm. I didn't see that previously though. Mm-hmm. So, I mean, previously basement apartments weren't necessarily a common part, right? Ontario had to pass out their rules. So anyways, it's nice. It's just a little bonus, right? You get to set the market rents and then maybe 10 years into the future when your rents are significantly on the market, you're not stuck to the 2%. So. Yeah.
I mean, so I tell this to a lot of my students too. If you've got a tenant that wants to be somewhere very long-term, try to get them into the basement unit with no rent controls. And then somebody that, has a goal to buy a house 2 to 5 years out, those are perfect for the top unit. But I will say like right now, and who knows if this will pass, I'm thinking it likely will, Ford is trying to put a freeze on rent increases for next year. And that would also include all dwellings even after 2018.
Interesting.
Yeah. So, I mean, obviously I feel like it's a thing with votes, being a landlord and an investor in this market, clearly we're not appreciated in my opinion, but it is what it is. But, again, do they really need to stop it? It was 1.8%, 2.2%. Is that really anything? But unfortunately taxes go up and other things go up. In a way, I think that it's going to exacerbate the shortage issue and people are just going to get fed up and, decide to do something else. But I'll tell you, real estate got me where I am today. It looks like it got you where you are today, but there is definitely some red tape and there's definitely some things and hurdles that we've got to jump over. And this is likely going to be the latest one.
Well, it's interesting you mentioned in terms of those challenges, especially of expenses increasing, right? Mm-hmm. So I don't do a lot of work in the commercial space, but recently I've started to help specifically one client look for commercial leases, and they're also looking to buy places. And like, while I'm going through this process with them, I'm like trying to learn as much as possible. Is there an opportunity here to own commercial real estate versus the residential? And definitely it comes with its own challenges of like long vacancies, more down payments, all of that, right? But it's seeing the triple net lease, where it's specifically a lease where the tenant pays their rent and they pay everything else.
The taxes, the maintenance, the utilities, and any upgrades that they want to do, etc.
Yeah, exactly. And in these cases, it's interesting. This specific client is budgeting like $500,000 to build out their business each time they rent a space. So looking at it from an investment point of view, if I owned a property and my tenant was sinking that much capital into like making this space work for them, signing a 10-year lease, and there's it definitely intrigues me, right? Just to see, is there somewhere, definitely it's not for a new investor, but maybe if you get a good few properties, you build some equity and you want to roll it over. I'm still in the research phase. I'm not recommending it to anyone, but I'm still trying to just learn as much as possible through the process to see, is there an opportunity there, in the future to own a few commercial buildings. And if you have a 10-year lease and you figure out a way to reduce that vacancy, that's the biggest part, to have that, like a good tenant lined up, right? Because if you imagine, there are people. So I look in Welland, right? Just driving around, there are these small commercial properties that are just a box and a national bank or a BMO or a TD has their branch. If you could have a tenant of a bank who's like going to stay there for the next 20, 30, 40 years, taking care of everything, like, I don't know, it intrigues me, right?
It definitely makes commercial real estate, especially in times like this, once this, COVID stuff is all over, quite intriguing. And it's funny that you mentioned it, because I was actually thinking, like, with all of the rent freezes and all the different things that they're doing, it may not be a great time today, but at some point there is going to be a new level of normalcy, right? Mm-hmm. And at some point people are still going to want to go out and do things. I think there's going to be an opportunity to potentially buy at a good price if a lot of things become vacant. But again, it has, in my opinion, also more risk associated with it. Absolutely. However, I agree with you. Like, it's, you're not stuck with the LTB. You're not stuck with the Residential Tenancies Act or the whole landlord tenant board stuff. It's a business. And so I was I'm still looking at storage units. I'm still looking at different things like that where, our hands aren't as tied as being a residential landlord. Now, that's not to say I'm not going to continue buying residential. I think that there's always a great spot for that, but it's not a horrible idea to diversify, a little bit into other asset classes in real estate as well.
Yeah. I definitely see a future there somewhere. I'm just figuring this out as I go along. So this is almost one of the things that I've always done in the past, like during my investing. It's like, I'll have, my bread and butter, something I'm focusing on. But when someone speaks to me about an opportunity or they mention something, I'll dig into it. I'll research it, right? I focus on the Niagara region, but when someone speaks to me, look at this area, this type of property, I don't like to deviate too much, but I'll still look into it and I'll see, hey, is there an opportunity there? Is there something that I don't know that may change the way I look at things, right? So that's the same way I looked at this. Earlier in the journey, I own 3 condo units of student rentals in Mississauga, near the University of Toronto, Mississauga. When I got started, everyone was telling me, hey, you can't buy anything in Mississauga. It's too expensive, right? Because it was really expensive. Nothing cash flows in Mississauga. Those properties actually had $700 condo fees when I bought it. So like all the red flags were going off. It had fraud happen in that building, right? And every unit owner was paying like these special assessments, right? So all these red flags were there. But then I looked at it. These were 5-6 bedroom, like stacked condominium townhouses that was on a direct bus route to UTM, right? University of Toronto in Mississauga. I'm like, wait a second, if people in McMaster are renting out their rooms at that time, maybe for $500 a room, can't I do the same thing and then deduct my condo fee, deduct that special assessment, deduct all my expenses? Is there still some cash flow? And those properties now, from an equity standpoint, have done like so well. Just city of Mississauga, right? It's a ridiculous place to invest. But even from a cash flow standpoint, they were like north of $1,000 in cash flow almost from day one, right? And that experience has taught me that, you know what, like, so this is where there's 2 almost lessons. One is follow the beaten path to a certain degree. If people are, making money in duplex conversions, if you replicate what they do, you will likely succeed. But at the same time, what I learned from that experience with the student rentals is, be open to looking at ideas that may not be conventional, and do your due diligence, right? Go through the process, run your numbers, look at what the potential rents are, because maybe that's an opportunity that no one else is looking at, and it worked out in that case, right? So.
Yeah, I mean, that is a good point. And the other thing I would just say as well, like, we're always talking about like different strategies and that kind of stuff. And like my biggest fear for people is that they just don't take action because it's like, oh, should I do commercial now? Should I do this now? Should I do that now? Pick a strategy, understand it, get really good at it, have a main strategy, and then maybe have a secondary strategy or something, right? So And then when you have more experience and you get more comfortable, you've got more capital, you have more connections, then you can start expanding and doing some things outside the box for sure. But I would just say, everybody that you probably talk to, Koukun and people who I speak to, they all have different ways of doing things. Even the burst strategy, you could do it differently. And there's successful people in every single strategy that you do. And so just don't have that ability to have the ability to say, this is the strategy I'm going to pick because this is what makes sense for my experience level, my time frame, the capital I have, et cetera, et cetera. This is a cool strategy, but I'm not going to get sidetracked by looking at too many things where I do nothing. Right. So that's the only other thing I would just say is, start focusing on one thing first, get good at that before you move on to too many other things.
So you're absolutely right. And in my case, I was exactly that person that was looking at all these strategies. And I implemented, which also didn't necessarily serve me. So I tested so many things when looking back, had I just dropped everything, just done one thing and replicated it, I may actually be further ahead, right? So I've done the conversion. I bought this four unit building to do a BRRRR, right? To buy out the leases, do all that. My duplex, I furnished it and tried to Airbnb it for 2 years. And so I've just gone all over the map. And even those first single family rentals, I started with trying to do the rent to own and then switch back to the single family rentals, right? So it was a good learning experience to try all these different things. But now I'm at this point where it's like, okay, the duplex conversion works. I'm just going to do that for the next, call it 10 properties I buy. And I'm not going to rush it. Just let it happen naturally. And once I've built that base, then if I don't want to keep doing that anymore, I'll look elsewhere. But almost to cut out the noise so that I can actually really dive into the one strategy and figure it out, right? Because in a duplex conversion, you got to have the right contractors. You have to have a good designer. You have to have the right team in place, right? And you need to know which city to invest. So all these different factors that come in, I feel I finally figured it out. So instead of now figuring out something else, let me just implement it and just grow that, right? So
yeah, absolutely. Really well said. I'm really enjoying our conversation, but the next part of the podcast is our lightning round. So I'm going to ask you a series of 5 questions. You're going to give me the first answer that comes to mind. Are you ready?
Okay.
All right. Number 1, what is your favorite real estate investing book ever?
Rich Dad Poor Dad. It was the first one I read, and it's a classic, right? Most investors start with that. So yeah.
For sure. Number 2, if you are a podcast listener, which one do you listen to the most or is your favorite?
So recently I've been listening to The Rational Reminder. It's actually it's a podcast about investing run by financial planners, but they don't like real estate investing, which is the most fascinating thing. However, I find that they're highly intelligent and they understand investments. So I'm so curious to hear what is their take on it and their perspective on it. So I've been fascinated because their views are contradictory to mine, but it's interesting to hear what their perspective is. So I've been digging into that.
Yeah, that would be interesting. Now, the only thing I would just say with financial planners is it depends how they get paid, right? Because if they get paid fee upfront, then they're likely going to give you the best advice. And I can go in a whole soapbox discussion on this.
Absolutely.
But, and I was a financial advisor for 3 months and I just didn't want to do it because it wasn't the right way, I think, to educate people. That's just my opinion. Please don't kill me, people. But, at the end of the day, a lot of them make commission by selling mutual funds and segregated funds and all that stuff. And in order for them to keep making a paycheck, they need to push you into these things. So if you're going to hire a financial advisor, financial planner, just make sure that they're fee only. So I would go back and I haven't heard the podcast. I'm sure it's great for the opinions, but always be careful where somebody's coming from what,
Yeah.
what viewpoints and what is it in it for them as well, right? So anyways,
No,
done with my
that's
soapbox.
absolutely.
All right, number 3. What is your favorite pastime? What do you do for fun when it's not work or real estate?
Do for fun. So recently I've been in a bit of a grind where I'm putting in like 12-hour days. But I love ice skating. I was a huge fan of ice skating when I was a kid, and it's something that it really relaxes me when I'm on the ice. I played hockey for a bit. I was never really any good at it, but just plain old ice skating, going around the rink, it's something that I love.
Awesome. Very cool. Number 4, if you lost all of your money and assets tomorrow, how would you start again?
I don't know if I'd build it the same way. I'd probably start a business, right? And just reinvest into that business until it produced like enough for me to live off of. Real estate would be in the equation as well, right? Real estate investing is a big part. That's an interesting question. So if I lost everything, except I assume my knowledge, right? Just like what I've learned.
Yeah.
I'd probably start from a pure financial standpoint at daycare. Daycares apparently make so much money, it's ridiculous. But that would actually be exciting. In a funny way, it's like some of the decisions that I have to make now are like almost calculated, right? Like I don't want to lose what I've built, so I can't like go all out into this something else, right? So to not have anything and to just be able to start from scratch, that idea actually excites me to the point that I wonder if I may actually try to do that in the future, where it's like, okay, just forget about everything I made. I've seen some shows about that actually, like these undercover billionaires, right? Like this guy goes to like a town, he like starts from scratch, like starts a brewery, I think. And I don't know, actually, I'd have to give it more thought to like know the step-by-step plan, but that idea actually really excites me in a funny way.
Interesting. So it may or may not be real estate. Okay, that's honest.
Yeah. I mean, I feel real estate is a great long-term wealth building. Mm-hmm. But if I had nothing, I think creating an income first would be more important in that place so that I could then take that and put it into real estate. I'd probably start by working for free for other successful either investors or business owners and provide so much value that they start paying me because they don't want to lose me. And then either find a way to do it myself, or if they compensate me enough, continue to work for them. That would probably, working for free would be a big part of getting started. I find most people are not willing to do anything for free, when the reality is if you have no experience, no knowledge, and no money, it's probably the best way to get access to people otherwise you wouldn't be able to get access to, right? So to be completely upfront with you, right now with my realtor coach, right, who's been coaching me for the last 2 years, I'm now helping him build out his coaching business where he's having some group coaching sessions, and I'm helping him to co-lead some of those sessions, and I get paid nothing from it, but I get to learn from him how he coaches people. So it's almost like I'm learning a new skill of how to coach. And in that, I don't know if there's an amount of money I could have paid him to get that kind of training, specifically from him, right? Because I feel he's like a master at like digging deep into people and finding out what like gets them alive. So anyways, it's just an example, but working for free is something I highly recommend. And it may sound funny, but it's probably one of the, especially if you're young. If you're young, you have no commitments and you need to get started, find someone that you feel like, you know, they're doing what you want to do, and just tell them, like, not forever, but for a month, for 2 months, right? Just, I'll work for free. Tell me anything you want me to do and just teach me as much as you can during the process, right? So.
Okay. All right, cool. And last question, if somebody has $50,000 and they want to get started, how would you recommend they spend it?
In real estate specifically?
It's an open-ended question, so you can answer however you want.
I'd probably recommend to them what I did to buy the first property with my own capital that I bought with my brother, where I think 50,000 now may not be enough to buy a property. There's not too many options, good options at 250,000 almost. So if you can qualify for something with a lower down payment, then I would start with that. If you can't, I would find someone like-minded, right? Maybe they also have the same amount, partner up, do a 50-50, get started. Specifically for me, like I mentioned, if I had 50,000 and nothing else, I would put that money into coaching to start with. Not all of it, but a good chunk of it. And then find some sort of business or some service I could provide of value to others where I could get paid for it, right, over time, and learn from a coach that could really guide me in the right direction so that I can take that 50, make it into something more, and then now I have something substantial to invest. So that would be the route I would go.
All right, awesome. Koukun, where can listeners reach out and find out more about you?
Yeah, so I have a few resources. If you want to just watch, I have quite a few videos I post on YouTube. So if you search my name, Koukun, right, Koukun, you can find my YouTube channel. There's a good bit of content already, and I'm trying to sort of document the process that my clients are going through, especially with these duplex conversions with their investing. So you can just watch it for free there. I do have a couple of reports I've created as well. One is on creating a legal basement apartment. So if you go to legalbasementapartment.ca, it's a guide I've created with my designer. So he's a BCIN, right? Kind of like an architect, but for residential. So we've created that report together on what are the requirements to create a legal basement apartment. So you can get that there. And I created another simple guide on investing in the Niagara region, just some of the high level overview, what's going for the Niagara region at niagarainvestor.ca. So those are kind of the best resources that I have.
Amazing. Koukun, thank you so much for being on the show. It was a pleasure having you on, and thanks for sharing your insights.
Awesome. Glad to be on.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?